The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Everyone, Basil Chapman on the 17th day of November. My pleasure to be here Monday through Friday, noon until 1 p.m. Eastern Time. 877-927-6648. Love to get your call. This is going to be very interesting because in the Chapman wave methodology, there's a particular technique that I describe in my CD introducing the Chapman wave methodology, my CD book. And give me 1 second here. Let me see if I can just get this going. It'll be nice if I can because it'll explain things. So let me put in my password. There it is. Okay. And what's really interesting about this is going to be slide rogue wave, slide 268. So let me find that. That is right there. The rogue wave is in, I just noticed this is very second in terms of slide 11A. Okay. So in terms of my analysis, what's really important is that, there it is. So the rogue wave, there's a particular technique that I discuss in my CD introducing the Chapman wave methodology. It's a book available at TFNN. The analogy is there's a sign at the beach that says high tide at noon, and at 12:06, 12:08 p.m., you're sitting at the water's edge reading a book and relaxing when splash, suddenly you're soaked and wondering what happened. Well, the tide might have turned, but that one wave didn't read the sign. And within a split second, you look around and the tide's going out, and you say, well, what happened? That is exactly what I think happened yesterday. Look at the daily chart of the E-mini. Actually, this is the almost 24-hour time period in the E-mini. Makes a high at 25.94.50 right there. It was also a Chapman wave 5 in the Chapman wave methodology, and a peak D at 25.94.50 on the 9th of November. Comes down, but all the time from about the 23rd of November, the MACD, the moving average convergence divergence, has been pulling back, and the stochastic has been fading miserably. The only thing that confirmed the rally was the on-balance volume, the blue line here. This is just a running total of adding the up volume on an up day and subtracting the down volume, subtracting the same volume if it was a negative close. So what we're looking at here is that suddenly there's this news-related spike to the upside. The Dow goes from the 2555 area on, what was yesterday? Thursday, on Wednesday. And Thursday has a spiral up to the E-mini goes to 2589.50. And today is testing the 9-period moving average. It's down 450, not much, but down at the 2580 level. So we've got to watch this really closely. Why? Because on the week, if there is a peak here with this doji candle, and if perchance we close underneath the low of last week, which is very difficult, I don't know how that's going to happen, but that was at 2563.25. That'd be very negative. If it just closes down mildly, then what we're looking at is there's a chance you could squeak to another higher high, but wow, it's going to get more and more difficult. Now, let me have a look at this in terms of what we're looking at in the overall market. INDU, this is the Dow, and right now it's trading down 91 at 23,366. We have been, if you look at this chart right here, we've been short for about 3 weeks now via the one-to-one short We had another short yesterday, which we closed out for a break-even trade. I was going to keep it, but I thought, you know what, it's fine. But we've had an intermediate term long from right here, from back in September, that big move to the upside. So for some subscribers who are still long the diamonds, that's an intermediate term position. The shorter term position, I think, is getting quite it's getting quite significant that the 9-period moving average has been coming down, and the 20-period moving average, the EMA, this red one here, is just beginning to show some signs of where it hasn't turned down yet. So that's what we're waiting for. Will it? I think it will, but we'll do one thing at a time. Let's get out of this. We're going to go back to the Dow daily. Look at the weekly chart, a peak F/C at 23,602. This is Technical Friday. I was asked the question, what's with these alternate waves? You know, I found a long time ago, well, let me just finish all the numbers. Someone remind me, come back, alternate waves. This is it's underneath the high of last week. The MACD is still quite good, flattening out, but still good. And the stochastic still way up at 95%, but it is turning down with the on-balance volume and the relative strength index. All right, turning down, it's no big deal if it's from a high level. It's when it starts to break key support levels. Hasn't done that in the weekly chart. Monthly still looks great. So parameters to watch. I'd say to subscribers to my opening call, very comprehensive look at the markets every single day, plus whatever we're doing in terms of our positions. I'll discuss that in a moment. We did add a new long position today. I'm not afraid of long positions. And we've only got the one short at this particular time. We got stopped out of our semiconductor short for a very, like a 0.7% loss. I'll be back. I just didn't want to mess around here with Applied Materials, having been a benchmark for the lead indicators in the semiconductors and having earnings yesterday. So let's get back to this. Any move above 23,492, the high of yesterday, that holds for an hour and a half between now and Monday or Tuesday, I have to consider that to be very good action. Any pullback, we've already taken out yesterday's low to start filling the gap. But anytime the Dow goes below 20,300, I'd say watch out below. All right. So now let's go to the S&P. I'll try to get through these a little quicker. SPX.X. The S&P is down only 3.69. Had the same thing, very weak technicals yesterday. Weekly chart still very good technicals. Monthly chart really good technicals. So the S&P, if it takes out yesterday's high and holds for 90 minutes above 2590.09 is the cash, very positive. Should test the all-time high of 2597.02. But if it fails to do that by about Tuesday or Wednesday of next week, but instead takes out key support, let's call it 2575, not good at all. The QQQs, now they went to all-time high yesterday in a peak G/C. My thinking is still that there's just enough residual strength to maybe make that D. Doesn't have to, because this has the characteristic as well with today's action. If it doesn't go above yesterday's high of 159.89, I suspect that we've got a rogue wave here, but here the technicals are not anywhere close to as negative as they were in the Dow and the S&P. So there's room to have another little pop. Weekly chart still good. Monthly chart still very, very good. Let's go to the IWM. Here's something. Look, this is what I've been discussing. And we've got this webinar, my webinar coming up Monday night. I'm going to be discussing the divergences in the market and what they mean. What's the implication? IWM is up 71 cents at 148.48. The Russell 2000. So is this the rotational correction? I'll be right back. Basil Chapman, Dow's down 87. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Basil Chapman has just announced a special subscriber event taking place Monday, November 20th from 5 till 6:30 p.m. Eastern Time. What can you anticipate for 2018? In this 90-minute webinar for subscribers to Basil's daily trading newsletter, The Opening Call, he will be discussing a variety of topics for the coming year, including, can high techs continue to lead? Will the financials be affected by yields, and where will yields be in 2018? The chances for inflation or deflation? What stocks could be affected or weakened in the coming year, as well as Basil's long-term outlook for the dollar and gold, as well as many other topics. For all the details and to sign up for a 30-day free trial to The Opening Call, visit the front page of TFNN.com today. With nothing to risk, this is a great time to try out Basil's daily trading newsletter. Sign up today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. So let's go through this slowly. We've got the IWM, really strong two candles. In fact, we've got 7 green candles out of the last 8 sessions. Even though the IWM went from the 147s down to the 144s, they turned out to be green candles because there were rallies intraday, and it kind of made a little bit of a difference. Now all of a sudden you've got them moving higher, and the weekly chart looked like it was about to break down. It held at the 200 period exponential. No, sorry, that's the 50 period moving exponential. Or is that a trend? It held trend line support. That's what it did. In the weekly chart, just barely, and now it's trying to rally. We'll see, because if there is a turn down and the 147 support gets taken out in the next 2 days, this thing's going to go back and retest the 144s. But as it stands right now, the rotational aspect is absolutely, it is so important. I'll be talking about that in my webinar on Monday night. Let me just tell you quickly what it is. On Monday night, I'm doing a webinar. This is for subscribers, but you can always join in. If you can take my newsletter, very comprehensive newsletter for a month free, and it'll be a part of the package that you get, because you'll also be able to come into my webinar, which will be archived. You can look at it as many times as you want. What can we anticipate for 2018? This is an opening call subscriber event, November the 20th. And what I'm really looking forward to, and it's a big challenge, I'm going to have to spend a lot of time, because every day there's been something different in the market that says to me, aha, don't forget to look at this. Aha, don't forget to look at that. The question is going to be, can the high techs continue to lead? I have a big question mark about that. I think they've had a fantastic run. It's time for a breather. Do they know it? No, they don't know it. I'm suspecting that. We'll see technically whether they're going to do that. That is the SMHs. It implies the QQQ NDX 100 because that's involved there. But at the same time, you've also got other sectors within the sectors that we're going to be looking at. What's the implication here for the financials? What about yields? Look at this. TLT up 94 cents at 126. In the 126s is what I said. If the TLT rallies and goes into the high 126s, it's going to be further information for me that says, watch to see if the market pulls back as money starts to drift from the equities into the so-called safety of bonds. I'm going to be looking at the dollar and gold. Now, this is very interesting. Why? Because here I am. It's so strange because subscribers are in the gold miners, and it's up, and subscribers are in the dollar. This is the UUP, a lousy vehicle, but the dollar, in fact, has been working very nicely. And so there's an anachronism there because you shouldn't be able to have the two and have them both go in the same direction. They can for a very short period, but not for long. So one of them is going to win out. And look at this. Gold right now, GC is, where did that go to? Gold is dollar, gold, there it is. Gold is, look at that candle. It's up 12. It's at a new recovery high. I spoke about this yesterday. Had a whole discussion with John from Philadelphia called, and I said, these are the levels to watch because I think once it gets into the 187s, it can move very quickly. Wait, quickly? We're at 1290.2, up 12. And that's what I was looking at. And that is saying to me that perhaps we're going to be see something in the market here that's a little different over the next few weeks, and that maybe yesterday's news about the taxes was just this Chapman wave right arm. Did I ever finish that? No, I didn't. Chapman wave right arm extension or a rogue wave. And what does it look like? It looks like this: that everything's going along fine. You think you've got yourself a sell signal, and the MACD and stochastic are going down. You can see by these indicators, and then suddenly one of the indicators just a little blip to the upside, not both, and bam, you go up just long enough for the bulls to say, oh my God, this is fantastic. I'm adding to my positions. For the bears to say, oh, I've got to cover. We've just made a new high or a new recovery high. And within the same bar, look at that, kabloop, it comes back down. I have a cartoon that I drew ages ago. I used to be a cartoonist. I'm sure the tide is going out, guy standing in the water. And then splash, he's waving and gulping. And then he says, never short the ocean. That's the tide. You got to be watching the tide. We know that. I've been trying to short the SMHs, tiny little losses, but boy, they can add up. And we will be right at some point. I'm not giving up. I think their semiconductors are really close to some kind of a timeout, let's just say. So here's gold. Look at silver. SI. Acting okay, not anywhere close as good as gold. Hasn't broken above the previous highs at 17.14, up 0.06. So this is going to be very interesting. Now, let me show you. Talk about dichotomies. Talk about the same sectors having different characteristics. I'm going to relate as much as I can. It's very difficult, but I'm going to try to do it to the socioeconomic political atmosphere that we're in. And to do that, I'm going to show different things. I'm going to show automobiles. I'm going to show pictures of mustaches, tattoos, all sorts of things. And I had discussed maybe 3 years ago, I started discussing it, although I've been talking about it for a long time, that we could be going to some kind of a Victorian age. In other words, human nature doesn't change, but on the surface things change, and that we're going into a very prim and proper era. And everybody can say to me, are you crazy? I mean, what are you talking about? And I always spoke about Cole Porter's Anything Goes from the 1934 period, and that we're in that era right now. You literally, up until 2 weeks ago, you could say anything, anywhere, at any time, in front of anyone, no matter how old. There's very few periods like this. 1920s was very much like this, when women were able to finally drive and find some independence. They started smoking it was the fashion to smoke. This period is so close in context. I'm going to be discussing that. And what does it mean for the markets? What about all the other indices around the world screaming to the upside? Worldwide stock market euphoria could, in fact, come into play. Will we see a big correction before then? That's really the big question as far as I'm concerned. I'm going to be discussing that. What sectors? We're already nibbling and starting to get into areas that I think are potential, either under the radar or areas that I think in the next phase could do very nicely. So it's going to be a fabulous, for me, a fabulous opportunity to just go through this period of excessivity, what it means, this period of when you have a period that goes from the late century into the beginning of the next century, you can go back 500 years and you'll see it. Every late period starts new products, new innovations, new inventions, and then the culmination, the kind of fruition comes in the next 20 years, and then you just develop them, but you don't discover many new things after that for a long period. And we're right in that phase now. And that's what we're seeing. That's why electric automobiles are so important. I'll be discussing those and stocks that could benefit or not. So this is the webinar Monday night, very comprehensive. It's pertinent to what we do. In the last webinar, we chose some stocks. They did very nicely. Hopefully we can do the same thing now. Basil Chapman, Target Ignitions Hour. Dow's down 79. S&P is minus only 2.5. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, let me just run through the questions quickly. I'll show you crude oil. Crude oil, yeah, is one of the questions. Yep, crude oil is having a very strong session. What I said yesterday is going to be very important because it needs to get to the 56s really quickly, because if it goes underneath the lows of the last few days, 54s is going to be even more important as support. And yeah, we are up $1.26. One of the reasons why I wanted the best I could is try to keep our commodity index long that we have for subscribers, which has had a nice percentage move. It held really well and is up very strongly today, is because the weekly charts, like it has a similar chart to the crude oil because it has a little bit more of a percentage in the crude oil, is that this is holding very well. So in the weekly chart. So that's holding nicely. And so that's the one. I just wanted to show you the TLT. Then we'll go to the callers. We've got caller waiting 126.33. There it is. So here's a trend line. It makes it real simple. My thinking here is that if the bonds rally further, yields come down, that's going to impact the financials a little bit. But it's also going to say now we can start to see money flow from equities. Some equities, not all together, but so from the outflow migrates from the risk of equities into the so-called safety of bonds. That's really what I'm saying. 127 will really clinch it for me. Now we go to Ari. Oh, we've got Ari in Arcadia. Ari, how are you?
Pretty good, Basil.
Good. I haven't heard from you for a while. You been good?
I'm doing very well.
Very nice.
I'm still trading FNV, Franco-Nevada.
So you're almost like an expert in this because this has been on your radar and your trading portfolio for a long time, on and off, right?
For a long, long time.
So yeah, I just want to do one quick thing. I've got the arch at the bottom. I've got the arch coming to the top. We've got a cup formation. I want to just draw this, folks. We're looking at FNV, which is Franco-Nevada. Whoops, let me do it correctly. Corporation. So I can't remember, are they gold or gold and silver or silver? I just can't remember.
Everything. They're gold, silver, oil. They're a royal company. They stream off the productions of mines.
Oh, I did not realize that. Well, let me just show you something very interesting. I think you're going to be fascinated with this. I'm not even going to ask you what position you're in right now. I just want to do the analysis as if I had no clue. And I'm going to show you. So the weekly chart is made what we call in a Chapman wave. It's a left side, right side price time match to the exact midpoint of that rise at peak C. So we go from the high of the 8th of September at 85.03. It's so interesting. That made its high on the very day that the dollar made its low, which is what we are still long from the very low of the 70-week consolidation, big arch formation in a weekly chart. And that was exactly the high in Franco-Nevada FNV, and it went to 85.03. It comes back down, makes a low on the 3rd of October of 76.76, has a bounce. That's what I'm using for the fulcrum, for the left side, right side plumb line. And that was at, that's the high of the 13th at 81.60. And if you continue that thinking of left side, let me just put it in here because this is Friday. I like to do a little education in the Chapman wave. I will be doing a webinar, full all-day webinar Friday, maybe 3-4 weeks time on December the 8th, just with these techniques in mind. So here we are. So we've gone exactly to the day. Yesterday was the day. So yesterday was that exact number of days to the left and the number of days to the right from that midpoint, and it went to 85.67. Today is the final day, and it's already done it 1 day early. So it's gone to a peak E, and it's pulling back a little bit. The MACD is good. The stochastic's holding very nicely at 88%, and that says if there is a bit of a pullback in the daily chart, especially based on the peak C minus so far in the 120-minute chart, that the it's at 84.12, that the 83.18 to 82.30 level should become very good support. Now let's see what we've got in the weekly chart, alternate wave. So I'm calling this has got more the characteristic of, I'm calling it an F/C with a doji candle, a long-legged doji candle. Okay, so my thinking here is that it's gone to a leg D in the, this is one of the best gold charts that I've seen for a long time. This is a great company, I can tell. So this is what I'm thinking, that within the context of a position, if you are long, then I would say I would not want you to touch anything because gold is trying to make some kind of a base right now. I'm not sure it's going to work. I need another week at least to see. I like the action very much today, but it's just 1 day. I want to see how it follows through. I want to see if the dollar's going to pull back more. But in the meantime, this is looking very good. If I wasn't in it, I'd be looking to buy on any pullback that takes it under 83. I would start my position. Probably usually I say nibble. In this case, I would actually start a position that's more like a 1/3 or more position. But if you're long, what I would say is I'd just be a little cautious if it closed. If you've been long for a while, then if it closed under 82, I'd say, you know what? Maybe the others have to play some catch up, as we're seeing now the rotation in some of the different sectors, that where some of the stocks in the same group, like a Target, is not acting as well as it should, but you've got a Walmart acting fantastically. So in that particular sector, this is the same thing. So I would not consider any short in FNV. I would consider, if you're long, I would consider adding to it. But on the side that says you haven't got anything yet, I would buy on a pullback, and I have a little patience to wait for it to pull back. Now, what are you doing?
I'm going to ask you a tough question. I have two lots, and one is long-term and one is my trading lot.
Okay, good.
And my trading lot, I'm thinking of selling a 85 December call for like $1.40.
Right.
And for my long time, I'm thinking of selling a 90 for about 40 cents, and all in December. So I don't want to risk my long trades that much, but I'll sell it at $90, and the trading I'll sell at 185 for about 140. How does that sound?
So that would impact both your positions, correct?
Yes.
You see, I really, you've done so well with your thinking. I don't want to change your strategy in the least, other than to say that the strength that I'm seeing in the monthly chart for me is the larger tide. I'm seeing the weekly chart perhaps having a little bit of a double top here. I don't know if that's the way you see it, but that weekly chart with the candle, in other words, if next week, instead of rallying to a new recovery high above 85.67, there's a pullback underneath today's low of 83, let's call it 83 instead of 83.38, it goes under 83, then I can see a sideways consolidation. Worst case basis is a U formation, but wow. See, the way you're looking at it, it's as if you're a little nervous that it could go down to the 77, 75s over a period of time. Is that correct?
Not that low.
Not that low. Okay. So then I'm going to say to you, I don't really want to. Let me tell you my thinking, and then you try to put it together with yours. Have you got? Can you stay through the break?
I sure can.
Okay. So we've got Ari in Arcadia. We're looking at 84.11 is the price on FNV. This is Franco-Nevada. It's made a peak E. It's starting to struggle a little bit here, but I'm still looking at the technical saying there's more to go on the upside. I'll be back and we'll talk about what I would do.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So we're on with Ari in Arcadia. So this is my thinking is this. There are tax implications. There are a whole bunch of implications. I think you've thought it out very well, because my only other thing was to say on my core position, I would have a mental stop of about 82.30 to take off just a little bit if I wanted to do anything at all. But to be very strict, because it's a longer term position, I'd probably say I want to give it at least between 81 and 80 to make decisions on that. On the shorter term position, I would put a stop around about 80, 82.50 on half the position. And if it was to break in the next 2 days, if gold keeps moving higher, and this is going to break above 85.07, I would just put a trading stop so that I'm not obligated to anything. It will tell me, and the trading stop, you could make it 3 points. It doesn't matter, but you have a trading stop and just let it take you out, because I can tell you this, that if it starts to break into the 86s by Tuesday or Wednesday of next week, I think it could have another big push to the upside. So that's all I'm going to say. That's my thinking, but I believe you've got a strategy that kind of fulfills the way you trade. So I don't want to interfere with your trading position. I'm just saying that's kind of the way I'm looking at it.
Okay. By the way, I see support about 21.20. That's where I see support.
Yeah. Okay. Yeah. That's fine. So it's the trading position I would keep as a trading position, and I would even think if you're even considering right now of this, you're a little nervous, just take off 1/3 and let the other 2/3 have a stop. You can make a stop, whatever you want, because you've already taken your profits, and if it keeps moving higher, it's to your benefit, and you can sleep well because you've done due diligence to money management. But I think you've got a good strategy, but I'm just throwing that out as an idea. Hey, thanks for calling.
On the
Let
trading
me know how that
position,
goes.
I do not hesitate to buy right back, Wendell. Basil.
I know you do. That's why I'm saying don't be afraid to take something off, because I know you're very quick to get right back in.
Thank you.
Thank you for calling. Have a great weekend. Let me know how it goes, Ari.
Okay.
Thank you. So, folks, let's just, for a number of people are talking about, I got emails too. Well, I got a lot of emails. Victoria era, every day is another story. Was another story of sexual harassment received. I was wondering, I'm saying to myself, how is this going to end? And it's got to end very abruptly. And this was just perfect. The sexual harassment. Why? Because it means that people will stop. They're going to try to refrain from anything that has any connotations whatsoever to the other party. So that means even cussing is going to change, and that's what I've been talking about. And I'm not going to waste time. It's something in my subscribers know. I show charts and talk about this all the time. I will be following it. It's not going to happen overnight. Next question was Tesla, TSLA. Here we go. Tesla had a big spike to the upside. It's at 314. It hit 300 and, it opens at 325, goes a tad high to 326, trading at 314. Now, I don't want to waste time talking about Tesla right now, other than to say this guy is an incredible innovator. He's an incredible speaker in terms of promoting. He's a promoter. I suspect there's going to be some financial problems coming up, as well as producing what he wants in the time that he wants. But as an innovator and a creative person, amazing. He's just, can you imagine? You saw the truck, right? I mean, beautiful truck, has a steering wheel in the middle. I don't think that's ever going to get past. Anyway, we don't have to talk about that. So Tesla, I wouldn't be surprised if over the next few weeks it tests the 280s. We'll see what happens. And a lot of men are wearing beards or unshaven now. What does that mean? Here's my chart. Those beards eventually become, oh, it wasn't what I wanted to go to. It's this chart right here. There. Eventually start to come off, and then all the accoutrements, the accessories, like Dali moustache, that's kind of what we'll see. We'll see those big twirly things. I've got a whole thing that I'm talking about right here, in fact, about hair. Look at this, Mozart to Hamilton. That's not Alexander Hamilton of that period. This is Alexander Hamilton of Broadway play. Look at the hairstyles. Look at this. This is today. Look, I've been talking about this for I don't know how long. What is the thinking culturally that allows for men to spend so much time on their looks? This is not a negative positive. It's just a comment. That's my question. It's been for ages. And now look what we're doing. And you walk around and you see guys with hairstyles that must take a long time to groom every day. It only happens in a few periods in history where this happens. I'll be talking about that because it's part of the market that we're looking at. It's a part of the anything goes. And I'm still convinced that you got to be very careful here. Some things are moving up. We're lucky we bought a stock today. It's moving up beautifully, brand new stock. Hey, the day's young, anything can happen, but at least it's moving up. That's nice. Men wearing beards, okay. Okay, so the other thing is back. BAC, Bank of America, we're out of it. I hope that we can get back into it. And I think it's going to be part of the next phase, but I think it's got a little chop to go because the TLT is moving higher and therefore rates are coming down. Look at my triple yield chart. I'll show my subscribers over the weekend. Look at the lows of this weekly chart, of this bar of this weekly chart. Here's the 30-year, here's the 10-year, still holding very well. 5 years holding fantastically. So there's going to be something going on between the yields that is very important. Look what happened to wood, which is the iShares Global Timber and Forestry ETF. It's pulled back. It's still holding very nicely. And the HGX is up at highs. The housing sector. So this is a very diverse market, a market that says within a sector, there are stocks that are just plummeting and there are stocks that are making all-time highs. And that's really unusual. The dollar, look at the dollar, DXY, pulling back a little bit, but still above the low of 3 days ago, holding quite nicely. All I can say is I've never done this before. We're long the gold miners and we're long the dollar from the exact low of this weekly 70-week arch, huge arch formation right here. Look at this. Look at that. From May of 2016, 91.92 goes all the way up to the January high of 2017 at 103.82, and then comes down in exactly, there's the plumb line to the exact high, the week of the high, the week of the low on the left to the week of the low on the right. Unbelievable. We were lucky to get, I think we were lucky. It's had a very nice rally since then, but it hasn't screamed away. But it is a low bar that was very important based on the Chapman wave methodology. Now let's go to next question. Crude oil, CL. Where did that go? Did I just type in the wrong place? Yes, I did. Let's go to the USO because most people will look at they won't look at the commodity index. They'll look at the actual trading vehicle, which is the United States Oil Fund, up 25 cents at 11.32. A little doji candle low. Another doji candle turnaround day. Breaks to a new high. Had a doji candle Chapman wave silent peak E, and then goes to a Chapman wave silent leg F with a silent doji in the middle. Comes back down. So this is going to be very interesting. I think crude oil could have a bit of a rally here. We're going to be watching it very closely. JNK bouncing strongly. Yes, I had that in my newsletter, but I didn't show the chart.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So just as we're about to wrap up, junk is J&K. It is the Spider BB Barclays. It's a bond fund, and it's running nicely. This is something to watch. Look at the U-shaped pattern that's been made. Successful retest of the low that wasn't hit from March down at the 36.19 level. This last one this week went to 36.28. It's trading right now at 36.81. These look like big shapes with very small numbers, but that's just the way it is in the bonds. I like it right now. I think it's going to try for the 36.90s to the 37.20s. We'll see. It's going to be very important to tell on certain aspects of the market. Okay, so let's do this. A question I had, I said I would get to it. That was Jane K. Now, Amazon, I said I want you to do that just before we wrap up. Amazon, you see, is trading up. It's down $1.39 at 1,357. I had a question about 1,135.78. I had a question about buying a call, and I said hold off a little bit because I think that Amazon's not acting as well as it should, because Walmart's really taken the lead here. It's down right now, but it had a huge move to the upside. And I think Amazon, I said to the person who asked the question, I said, why don't you wait just a few days? If you can get a call, like a 135 call, closer to the 132 to 130 area, let's look at it again Monday or Tuesday. I could be wrong on this, but I think Amazon's kind of running out of steam just for now. Maybe as we get closer to the holidays, it'll have a big spike. But right now, it's just it's a little rough. So let me just do this one more time. On Monday night at 5 o'clock Eastern Time for my subscribers, I'm doing a webinar. That webinar, as people who know, when I do my webinars, they're very intense. I go through a lot of things. A lot of people like to go through it again, so it's archived for 30 days on your site. And if you aren't a subscriber, you can subscribe for free for 30 days, and you'll get the webinar, and you'll get my newsletter. So I had some really nice buys, and I've already started implementing some instruments that I want to be using. So I'll be doing that probably Monday again. One we did today is already up about 50 cents from when we went in early this morning on the long side, a regular stock. So check it out, and you can start looking at my newsletter, the opening call, over the weekend. Stay tuned for Steve Rhodes. I'll be right back on Monday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.